Melissa. Welcome to the show. We call it Weekend Wisdom, Venture Capital Demystified and Debunked. And welcome everyone who is joining us from Twitter Live, LinkedIn Live, YouTube, and Zoom here. Thanks so much for taking time on a Saturday morning, Melissa.
Thank you, Amit. It's really a pleasure to be here, and I'm a big fan of MEDICI and the work you do. Always excited to collaborate.
Right. It's a small mutual admiration group, as I call it. I think we are a big fan of the work that Melissa has done. So very quickly, for those of you who don't know Melissa, she's the founder and managing partner at EMVC, which is an early stage fund. She has done a lot of work in India and with the Indian companies, even in other parts of the world. Melissa, why don't we start with a very quick background of the kind of work you have done in financial services and the work that you have done with Indian startups?
Sure. So as you mentioned, EMVC is an early stage fund based in the US. We invest primarily in India in the most innovative FinTech, InsurTech, both B2B and B2C at the earliest stages, and are hands-on partners with companies as they expand, and in particular from a cross-border perspective. We believe that the digital transformation that's happening in India right now is one of the most sort of exciting economic stories of our generation, and that founders really need lots of hands-on support in terms of getting the word out about what they're building around the world and vice versa. And I got into this after over 15 years of being in India and working as part of sort of this digital finance trajectory of what's happened through microfinance, operating policy strategy roles. My interest in the future of wealth tech in India started years ago, maybe around 2009-10. I was leading financial services at the US-India Business Council, and there were a lot of large global asset managers and wealth companies starting to think about what the future of their businesses look like in India. And even back then, I started to take delegations and work together with those companies on imagining how things in India might look in the future for wealth tech. And so I think where we are now is a very exciting moment for this space, but we're still in super early days and there's lots to move ahead. I split my time between India and the States, and I'm very excited to be part of the ecosystem.
Yeah, and while Melissa is joining us from Greater New York area, but please be cautious. She knows a lot of local languages, and in India, she understands the local sort of culture and languages and so many things, right? So I have always been very fascinated by the kind of grassroots level understanding that you developed in the work that you did in the hinterlands, and working with some of these financial services organizations and associations in the past. So very impressive. And as you said, the focus of today's session is on wealth tech. Broadly, we include two things in that. One is the personal finance management side of it, and the other is the investment side of it. And we have seen that globally, companies who were sort of on these two different segments or two different extremes, they're actually coming together, right? So like for example, Econs is coming towards also including some of the personal finance features. And on the other side, there are companies which are moving from left to the right. So that's why this space is kind of very interesting. My first question to you would be specific to India market. What do you think is kind of the bigger opportunity in India across these two segments within wealth?
Yeah, there is major opportunity, both from a venture perspective and even much more so from a founder perspective of building things that really solve customer needs. And I agree with your segmentation that they're really two different markets that we're talking about completely in terms of the ultra digital savvy, affluent or semi-affluent urban market, which some folks call India 1, and then sort of the rest of India. We can talk about those separately. This digital kind of trajectory for wealth tech has been happening over quite a few years. And we've seen major developments over the past 5 years. So a lot of the things that even today founders are starting up and considering sort of the legacy incumbents are actually firms that have been innovating just over the past 3 to 5 years and scaled up really quickly. So it's also an interesting moment in terms of the fact that there is a really great base of companies that have done exceptionally well and are admired for their execution. Companies like Scriptbox, Zeroda, Upstocks, etc., across the market, FISDM. And those companies continue to scale and innovate, and there's lots of room for further product development and differentiation at the early stage on top of different spaces. Particularly for kind of the urban, affluent, often millennial, who are the most digital, tier 1 market of India, there's a lot of product commoditization has already happened in terms of the ways Indians save and invest and access their kind of core investments, a lot of which is mutual funds and SIP into retirement, etc. And so the next level is really to appeal to sort of a higher needs of wellness, fun, convenience, short attention spans, and figure out ways to integrate into those users' daily lives and offer them better products to manage their savings, risk management, and grow their wealth. We see companies that are serving both kind of legacy savers and investors who have large portfolios of investments and figuring out new products to kind of deepen that, as well as many startups that are targeting these very digitally savvy millennials who, you know, have some money or will be having some money from their parents, keep their money mostly in a bank account, use their wallets and kind of switch between whatever's offering the best cashback discount, and helping them move into savings. And there's a lot of opportunity there. Right. Separately, you know, when you're ready, we can talk about kind of for the rest of India, there's a whole other problem to be solved.
Right. No, in fact, we can, that's a good segue into that. You know, I was going to ask you that, how does this opportunity look like in sort of, you know, India 1 versus the mass, you know, the India 2 or India 3 as people call it. And especially in the context, if you could also talk about that, say, for example, at least in the PFM space globally, we have seen that it's very hard to make money, right, in that segment. And India anyways has this whole issue around how companies make money, right? How do you kind of build revenues, profitability, and all of that? Like building a product, I think, given the amount of technology sort of depth that we have here in this skill force, and also, you know, in terms of like kind of a lot of founders today, co-founders we are seeing coming from a technology background. I think products that I have seen recently, some of them are actually world class. But how do you make money? And when you go to the mass market, there I think the problems become even more complex. So how do you kind of look at those things?
Yeah. So again, sticking with our discussion on the kind of core urban mass affluent segment of the market that's digital, for personal finance management, PFM, there is a challenge on monetization. There are tons of great teams we meet across the ecosystem that are like product oriented, beautiful design, like excellent intention, know the user because they are the user in terms of being a digitally savvy millennial. And yet, like a high acquisition cost, low margins make it a very challenging business to figure out. And so the opportunity there we see is really integrating with the consumer's lives. And it's not as easy, you know, it's easy to talk about, but in terms of actually executing and delivering that over the long term, it's not easy. There have been products over time in India that have worked like that actually are localized enough to the use cases and needs of the user, have a bit of a behavioral angle with nudges and rewards, etc. And the actual underlying products are better, for instance, being able to figure out how to innovate on the financial side to actually offer higher savings rates, etc. And those products, a few of them will have the opportunity to become kind of long-term partners and sit long-term on the real estate of the mobile phone of those digitally active users as part of their financial lives. So this is really like a behavior change question, not just who has the best UX as a PFM. Additionally, we believe that there are opportunities for sort of micro communities within India. India is super diverse. I often tell US investors to think of India as Europe in terms of completely different cultures, languages, socioeconomics, segments, etc. And so building for very specific users within this market and customizing for them offers an opportunity also to serve their sort of wealth generation needs, savings needs, etc. One example, we're an investor in a company called Basis, getbasis.co, that is targeting urban Indian women that are already digital. Most of them are earning good salaries. It's not an underserved segment per se, but yet those women historically in India are not part of kind of mainstream financial decisions for their households. And yet Basis has this very viral, extremely engaged community of women across India talking and learning and sharing content about kind of financial investment and savings. And they're a SEBI registered advisor, and that leads to being able to productize different kinds of investment decisions. The same could be said for freelancers or sort of gig workers within this upper digital class and other types of segments in the market as well. The creative class, I haven't seen a startup yet targeting more creative types versus square white collar. There's lots of room to innovate in those spaces.
Okay. And, just sort of a couple of my thoughts on that. We have seen that companies, from PFM extend into kind of, lending in order to make money. Also, we have discussed this in the past that there is this whole wave of neobanks which is coming in. Right now, obviously, India does not have a license like Singapore or Hong Kong, but sort of over the top neobanks where they sort of partner with a traditional bank. Because they will be kind of, the place where the money will be there, and it's about the entire financial life of a person, including your savings, investments, PFM, all of this. Do you think that's a better model to kind of, look at this segment?
So I do think that there is a bit of overhype around neobanks in India today, especially consumer facing, and that's a topic for a whole other conversation, and one that you've done a lot of writing and research on. In one way, yes, that if the right neobank, back to this point about kind of integrating and changing behaviors of consumers, if the right neobank can do that, then they are extremely well positioned to also serve sort of the savings, investment, wealth tech needs of their users over the long term. But between now and that point where there's a full stack solution that is sticky over the long term, not just for a couple of years, we feel there's lots of room for individual products to emerge. And that especially for these digital savvy users that would be also the consumers of most of the neobanks, they are savvy enough to have different apps for different use cases. In other markets that are where this sector is more mature, for instance, in the US, users still have a separate app for their payments and for some kind of fund savings or investment gamified situation, as well as their banking. So while the long-term goal is to be a full stack solution, it's not necessarily winner take all from the beginning.
Right. In fact, on that note, so India, if you look at the overall fintech segment side, India has done extremely well from a payments perspective, building a very interoperable, faster or, like almost real-time ACH network in the form of UPI.
Yeah.
And it's working very well, right? So, but as far as sort of wealth management is concerned, or wealth tech is concerned, I think traditionally US has been a great and very large capital markets opportunity. In wealth tech, we have seen great, lots of great companies with sort of amazing valuation, as of today. What do you like? How do you sort of compare, and what would be some of the things that we could look at and learn from US market?
Yeah, I mean, frankly, I think that the markets are different enough that I believe more of this space needs to be innovated locally and not learn from the US than pull learnings from the US, because users and user behavior is extremely different in these segments. What has worked in the US really well is this sort of integrating to core kind of financial needs and behavioral environment of the user, whether it's a Robinhood or Acorns in terms of companies that are really have become like a daily practice for users, or emerging companies like Copilot that have been able to help millennials in the US feel more in control of their finances when there's a lot of uncertainty in many other aspects of their lives and the economy, by offering a very intuitive, even fun way to manage money. I see a lot of that design and product innovation already happening in India. And so really the more interesting places to innovate are the actual kind of distribution. How do you reach more users and maintain them and retain them? And then also, we haven't talked about, I think there's still remains a lot of kind of core actual financial innovation and capital markets innovation. The US is miles ahead of India and many other emerging markets on the passive investing sector and exchange traded fund ETFs, which offer very low cost and often kind of fractionized ways for consumers to invest. That market is quite nascent in India, and this is a very exciting next few years because this is when the market is taking off. Companies including Motilal Oswal as a legacy institution or emerging startups like Small Case, et cetera, are really innovating in terms of breaking down the barriers that have prevented an ETF or passive market from existing. And I think with those kinds of financial innovations, there will be new, like hyper-localized Indian products that can exist to serve users and change the whole game.
Right. I agree with you that on the product side, I think there has been a great development from WealthTech startups, and some of the stuff that I have seen is definitely world class. But let's talk about distribution. I think you made the right point that a lot of things have to be figured out in terms of distribution. Now there is obviously like these big platforms which are out there, right? So how do you leverage those? So e-commerce firms or digital wallets which have become very big companies now, or maybe other tech companies. And then there's this route where you actually take the help of the offline world, which is the agent network, the DSAs, or whatever name you call them with, individuals or companies or brokers. And then there are some innovative techniques to do, using which you can go directly in the market, especially in the digital world, right? So what do you sort of typically see is the kind of the approach in the Indian market, and maybe also like how does it differ between India one and the mass market?
Yeah, so for India One, this Urban Digital India, acquisition tools are almost entirely digital. CAC remains quite high. Companies are spending a lot on sort of digital marketing across channels. Instagram, until recently TikTok, Facebook, et cetera, are extremely popular channels to acquire users. And we see some of it now, and I think we'll see much more as these neobanks launch in the market in terms of cross-pollination, of sort of figuring out channel partnerships, referral, affiliate network type things to access very kind of engaged, sticky user groups of other digital channels. We've seen WealthTech startups that we work with partner even with kind of non-financial brands that have affinity within their user groups digitally to be able to sell and acquire. But it's primarily just kind of paid marketing. On India too, for the mass market, which we haven't talked about much yet, it's a completely different story. And just like credit, sort of, and especially digital credit, has proliferated sort of mass market, vernacular language, tier 2 city and beyond India through banking correspondence or DSAs or these sort of like local networks that digitize small mom and pop shops like Kirana shops to be able to serve financial services. All of those serve as really interesting channels to reach new users for new savings and investment products. And that's where there's a lot of room for innovation on distribution. And then even beyond that, to the true poor rural consumer, although it's a completely separate conversation, truly more around stability and access rather than wealth creation, there's a lot of room there for the digital experience built on top of Aadhaar and the payment stack to be able to do interesting things. As an example, we're invested in a company, GramCover, which is building digital rails and a full stack sort of digital brokerage to reach last mile with insurance. But insurance for much of India with low income, very little savings, if any, is sort of a proxy for savings and an entry point into wealth and having savings. And so that's one way that building something specifically for that market is working.
Right.
We also, I should quickly mention, Amit, that there's a really interesting opportunity for sort of hybrid digital and human interaction that we're at least a decade away, if ever, of going entirely digital. And so a lot of these distribution channels for any part of the Indian segment still have some kind of human component to it, and that's okay. That's part of the culture and what makes sense for users.
Yeah. Before COVID, people used to call it phygital, but nowadays I'm seeing like people have changed the vocabulary and they're calling it the assisted model, because the agent could still be sitting at home and assisting the sale, but through digital channels. And that's very big in India, right? So if I may say this, that some of the startups who say that they are digital lending startups, as an example, 60% of their sort of deals are actually coming from DSAs, right, through offline channels, and now these days during COVID through digital sort of DSA channels, right? So yeah, that's a great point. Can you also talk about, so you have talked about 2 companies that you invested in. Are there some other companies in this WealthTech space that you have invested in, and you want to share like what are they doing?
Sure. One of the most sort of pure play wealth tech companies that we've invested in is Wealthy. The website is wealthy.in. And Wealthy is quite interesting. It's along the lines of the thesis that I just mentioned, that it's without question that for this space, there's still lots of room to grow. India has a lot of wealth and savings within its kind of even across socioeconomic segments, much more than the world realizes. But a large part of savings still is cash under the mattress, gold passed down through generations. One of my favorite stats is that Indian women hold more gold than the Federal Reserves of the UK and the US combined. And so the financialization of assets sort of across economic tiers means there's just a very wide opportunity to introduce new digital products. And as we mentioned, for pure play digital kind of brokerage advisory solutions, high CAC, low margins makes it a very challenging business to scale. And that for this sort of mass emerging affluent market that is not in the top tier of wealth in the country, they still are looking for human to talk to and an advisory component. And so Wealthy solves that by providing this open architecture kind of bank grade full suite of digital tools for independent advisors, and creating this digital network of independent financial advisors that build out a client base with a very kind of intuitive wealth tech style user experience on the consumer side. So it feels like a fully digital app, but also grows this network across the country with a very wide product breadth so that cross-selling can start happening from day one. And we find that customers find it very intuitive, and it sort of guides new parts of the market toward a fully digital experience.
And I think from a timing perspective, we may have probably time for one or two, maybe 2 questions. So just a quick time check there. So let's also talk about companies in a very specific space in this, where so there's a company in Germany called Scalable Capital, which recently raised like 50 million euros. So we are talking about complete, like sort of, very mature portfolio management, investing in trading platforms, right? So in India, we have a great example in the form of Zerodha, which is now sort of valued around $1 billion, a bootstrap company. They basically became sort of the #1 online sort of digital broker with about 15 to 20% market share. I think during COVID-19, they have opened like more than 1 million accounts or something, I heard. So let's talk about that, right? So I've seen that this is definitely one area within WealthTech where you actually make money, and it seems like a very solid business model. So any views you can share, from US market or on Zerodha around like a complete sort of, very professional, matured trading platform, including portfolio management and investments?
Yeah, I mean, the market in India for that is relatively small compared to the kind of market for the rest of the country, meaning the true sort of large wealth of the country in terms of consumers that would be requiring a full suite, full stack investment solution from day one in a very sophisticated way is still a somewhat small market. And Zerodha and its peers, and particularly Zerodha, are doing an exceptional job in building out this sort of full stack discount brokerage model. We see a lot of the incumbents in India, legacy AMCs, et cetera, start to really more seriously, not just pay lip service, but actually start to integrate with startups. And we think there's going to be some consolidation that happens in terms of them onboarding new digital channels to be able to serve that segment. But I believe that the day for a kind of pan-India full suite investment-only wealth platform is quite far out, not because it can't be built, but because that's not the kind of core needs of the consumers. We're still solving a little bit more basic problems that affect people's lives day to day in terms of how they save for the next generation, as you said, kind of get their banking and all other financial needs done at the same time.
Right. So that's a great point. In fact, I saw that Nitin Kamath, who's the founder of Zerodha, he tweeted that if you look at the core, the traders market, right? So total active traders in the country for equity side are only 16 to 20 lakhs people, and FNO is about 5 to 7 lakhs. So that kind of, sort of reaffirms what you're saying, that there is an opportunity there, but already kind of, Zerodha is big there, and there is a very large market, which is sort of, in the India 2, India 3, and even within India 1, which is consumer driven, right? These are not typically like traders who are sitting on the terminals, all day. So great point around that.
Yeah.
What do you think about account aggregation framework that has been brought in, and some of the other work that is happening from a financial infrastructure perspective? Do you see that will actually help sort of, catapult this segment and companies in this space?
Yeah, it's a great question. The account aggregator framework that is a new, complete sort of regulatory environment in which Indian fintechs and other institutions and startups will operate is highly relevant to this space. So once kind of personal finance management and other wealth tech apps are building on top of sort of the AA architecture, it will be very easy for consumers to switch between them. And even more so shop around for the best experience, the best product, etc. To be honest, on one hand, this raises the bar even further for companies that are serving this market to just level up and offer absolutely solid gold standard experience to be able to retain users. But two, not having to have the burden of kind of customer data management and have a very clear framework for privacy and these OpenStack rails enables them to not focus on developing that for a year and instead just plug in to this really progressive, interesting open architecture and then build for their consumers and solve sort of next level problems. So I think it's a two-sided coin, but net will be very good for the consumers in terms of the developments that happen and for sort of the comfort around the privacy around their data that happens.
Sorry, I was on mute. So I was looking at the India FinTech report that we just launched a couple of days back, and I was looking at the WealthTech space. So we estimate there are about 486 startups in the space. So quite a number of companies or number of startups actually operating. Just the personal finance management side has about 173 plus companies. And on the WealthTech side, without PFM companies, is about 313 odd companies. So it looks like entrepreneurs are actually gearing up to that, because what I also know is that more than half of these companies just came up in the last couple of years. Any thoughts on that?
Yeah, it is a very active space. And for anyone listening who's shocked by that number, if you're shocked by that number, you should just see how active it is across every space. It's very exciting what's happening in fintech across India in terms of the imagination and enthusiasm of entrepreneurs to build in this space. And it's a wonderful thing that there's so much of this happening. My thoughts on it are that, I mean, look, they're not all going to become the pan-India solution. The best case scenario is that the best entrepreneurs that have their users in mind will be able to really unlock true solutions that enable livelihood improvement for most of India by growing their wealth in a meaningful way, having better kind of financial practices, encouraging financial literacy, etc. And it will be a net win. We will see a lot of partnerships and consolidation that happens. And then I think some of these products will end up being features as part of these larger super app platforms, whether it's the telco plus payments plus neobank scenarios that will play out over the next few years, or whether it's a few of them coming together to offer a suite of products that solve the comprehensive sort of savings and investment needs for users. One example to leave you with of a feature that I think is extremely interesting and is very India-centric is sort of the digital gold products that have come up over the past few years in India. Indians love gold as a savings mechanism, culturally, otherwise. And it's been really exciting to see innovation around how Indians can move from passing along some bangles from generation to generation to actually bringing that into the mobile digital age. Now on PhonePe, Paytm, etc., anyone can, for as small as 2 rupees, can kind of hold some digital gold. And that's kind of one example, I think, where that is. There's another 100 of those types of products and features that can end up coming together to serve users' needs across WealthTech.
Right. And I think the only sort of inertia in this is that we were actually looking at some data of SIPs, and we found it very interesting that Indian investing has been very sort of short-term in nature. So a lot of, I don't have the specific number, but a significant percentage of the SIPs are actually stopped or broken within 12 months. And there's a lot of other substantial data which proves that basically Indians are looking at short-term in terms of investment. But then there's this whole wave of companies, as you were saying, right, who are now looking at sort of goal-based investing, which can be slightly longer term, right? And we have seen in the US market with Wealthfront and Betterment actually driving a whole behavioral change in terms of goal-based investing. And I completely agree with you. That's a great opportunity in India. And let's see how some of these startups and companies actually are able to change that behavior of people and bring that long-term sort of, goal-based investing role. This is my last question. We are sort of running out of time. It's always interesting talking to you. Probably we can go on for hours. My last question is, what are you looking for in WealthTech companies? And is there, some specific type of areas within WealthTech you're looking for? And also, generally, what do you see in a WealthTech company when you're planning to invest?
Yeah. So as we've talked about, I mean, the opportunity still remains large, despite there being 400 plus startups across the market serving this. Of the kind of financialized savings assets in India, 66% are still in bank accounts or bank deposits. And the other 30% are in insurance and mutual funds, which just shows that in terms of product differentiation and customization, and actually building like new products for the Indian user, that's where the interesting stuff is, and that's where the lasting systemic change will be. And so for me, we're looking for entrepreneurs that are not looking for sort of a quick viral app that's built on top of only existing solutions, and that doesn't really address any kind of core behavior or product change, but rather innovating for India with the Indian context. And by the way, that can therefore mean in an emerging markets context that's relevant to another 30 countries, either on the actual product or on distribution or on behavioral change in a way that improves lives and improves sort of the trajectory of how Indians save and invest.
Right.
Yeah.
Great. Lovely talking to you, Melissa. Thanks for your time. And I'm sure we will have more discussions on this topic. But for today, given the sort of time contract, I think we have almost like 35 minutes plus. Thank you so much for all the great insights. And for all the people who are joining us from YouTube or LinkedIn Live or Twitter Live handles of MEDICI, thank you so much for joining us on a Saturday evening or morning, as the case may be. With that, I would like to end this session. Thanks, Melissa. And bye-bye, everyone.
Thanks so much for having me. It's great to be with you.